Dear friends of Volumetric Trading, good morning from Eduardo Boratini. Welcome to this video analysis dedicated to the analysis of the American indices S&P 500 and Nasdaq for Thursday, October 2nd, 2025. Let's get started right away, as usual, by analyzing what happened yesterday, beginning with the S&P 500. We had a day that can rightfully be considered a trend day. A trend day that didn't develop immediately. We can see that at the session's open there was a small range, but then already around 4 o'clock we had what was truly the classic setup of a trending day. And as is typical of the best trend days, the close happened right near the highs. So the session's volume profile clearly shows a multi-distribution situation. In short, a price that maintained its directionality was supported by volume, by acceptance, and by participation, in other words, by interest. And this definitely lets us define the move as absolutely genuine, even from the standpoint of volume. What can we normally expect after days like this? Well, certainly the most important thing, both from a purely statistical point of view and especially from the perspective of the cause-effect relationship between volume and price, is that we generally have the possibility of a retest. That means a small discovery above what was the trend day's high, in this case, 6,770. A level that also coincides with the all-time high of the S&P 500, so let's highlight that. Yesterday, the S&P wink with tongue sticking out not only developed a trending day, but it also reached new all-time highs. Generally, it's very likely in the sessions immediately following that there will be at least a small discovery beyond what was, in fact, the 6,770 level. And it's generally from the comprehensive outcome of this significant discovery that the most probable, and indeed, the most likely scenario is then clearly defined. So if there's a strong acceptance, the day can potentially evolve into a sustained trend day, meaning another distinct directional day. Of course, it absolutely won't have the exact same magnitude or the full expected movement as the actual primary trend day, but rather approximately 40 to 50% of that overall movement. So this is already information we can take into account, because if we were to see a real breakout, meaning one accompanied by volume and the right order flow above 6,770, then we could have a surge that could realistically take us to the 6,795 area. And since we're obviously at all-time highs and don't have any reference points from the past, in this case it will be especially useful to monitor today the liquidity blocks that we can see on the heat map. In this case, our ball book heat map. So we can actually see where the more significant liquidity blocks are positioned to the north, in case this scenario is confirmed. In short, this can give us an idea of what the most likely target levels for the entire session will be. On the other hand, if the opposite happens, obviously here I can only say it's either one way or the other. Either one thing happens or the other. Because we obviously have to see during the session how this high will actually be traded again. If this high is broken, let's say there's an attempt to break it with a rejection, so potential stop runs, potential absorption, potential iceberg orders, then we could pretty easily see a rebalancing of what was basically the whole day yesterday, which in the meantime, what did it do? Let's analyze it as well. It's a day that went up with fairly significant volume, but at the same time, it also left behind some very high volume but equally compact acceptance areas, interspersed with equally small areas of non-acceptance. So, areas of expansion, momentum, acceleration, places where buyers and sellers weren't perfectly balanced in terms of participation. So these are areas that, clearly, when the upward momentum starts to run out a bit, these areas tend to get rebalanced. And that's exactly what could happen if the discovery above 6,770 fails, okay? In that case, the most important support level where the price could actually pull back to gain momentum is right around 6,000. Let's say, yes, the price area between 6,730 and 6,725 at first, a slightly deeper retracement, but one that obviously wouldn't yet invalidate what has still been a trending day. 6,713, 6,710. These are the more important levels to watch in the scenario where we're expecting a retracement. Now it's crucial to understand whether this retracement will happen first, before a possible breakout above 6,770 or after. So if there's a breakout on the upside, a failure, and then the retracement develops, in this case the support levels will naturally tend to lose a bit of their strength. That is, they're still interesting support points to identify and to look for possible reactions. But for sure, the whole scenario changes completely because we would reach those levels with a stronger downward momentum, since the auction in the upper part of the price range we're considering would have failed. So, it would be a move driven by a failure to make new highs. On the other hand, it's a completely different story if we get this retracement, maybe during the European session, or in the moments right before the market opens. So going back to touch these levels of 6,730, 6,715, 6,710, before the upward breakout happens, the support power would definitely become much more significant. And if these potentially supportive levels hold, especially if they're backed by strong volume that might come in at the open, then the scenario could get really interesting. At that point, we could more easily see the price bouncing off important levels, catching its breath, and gaining some momentum again. If there's volume supporting the move, there's a chance to create new highs and do everything we talked about earlier, following the intraday liquidity, north of what were yesterday's highs. A very similar situation, obviously, so let's remember 6,730. 6,730, 6,715 with a tolerance down to 6,710. It's crucial to watch the breakout and analyze the breakout above 6,770 for the S&P. Let's also take a look at the situation on the Nasdaq. On the Nasdaq, we've reached a pretty crucial point, even from a so-called macro perspective, because, as you can see, we're in a situation that's slightly identical to yesterday in terms of the day's action, but different in terms of the broader context. Yesterday created exactly the same conditions, the exact same context. In fact, we can even see that on the Nasdaq. There were some rather persistent upward accelerations, so definitely. A price that pushed with greater intrinsic strength compared to the S&P wink with tongue sticking out, which moved up progressively but in a somewhat milder, more moderate way, even if still persistent. The Nasdaq pushed much more significantly here. On the Nasdaq, we've also managed to create new highs, even though here the expansion compared to the previous high is much more reasonable. In fact, you can see that if we compare it to the previous high, the expansion was just a few points, nothing significant like what we saw on the S and AMP wink with tongue sticking out. The interesting thing to note here is that right near this swing high, we had a very important level, which we also saw in the previous video analysis, of buyer absorption indicated by our proprietary Vol Analyzer plugin. This, of course, is the potential resistance level. The market reached it, reacted to it. So basically, we can say that we still haven't had a significant, true breakout of the highs. We're also right at this resistance level. And as for how this resistance level was crossed, we can't yet say it was a full-fledged breakout. However, we can say that the Nasdaq attacked this resistance area with strong and significant long pressure, as well as a really substantial volume of big trades, most of which were on the ask side, so aggressive buying, attacking the buy side. So basically, this is a strong indicator of strength and also of It's preferable to consider this resistance level as having been strongly attacked, as being significantly weakened. So, it follows that this area, where this aggressive move happened, with this whole swarm of big trades on the buy side, it points to what is the most important support level of the day. So, as far as the Nasdaq is concerned, it's absolutely crucial to consider the area between 24,000, 9.75, and about 9.50 to 9.55 and 9.75. Thank you. For the Nasdaq as well, we still expect a new high, a discovery above 25,037, which was yesterday's high. And here, exactly the same reasoning applies as with the S&P. If we were to see a retest of this area before seeing the discovery, maybe during the European session or in the RTH pre-market, this support would definitely hold. It would hold better cards to provide the necessary strength to then go on and create new highs with more momentum. On the other hand, if instead we see the price start to pull back after attempting and failing to break out above 25,034, then the significance of these support zones would change a lot, because we could see the price looking for new acceptance at lower levels. So from 24,950, it could even project down to around 24,900 or 24,890. So, this whole area here is supported by the DAP. By the way, this was also the case in yesterday's trading day. Obviously, all this analysis should be considered purely for educational and informational purposes, and not as a solicitation for public investment or as an incentive to take a position. Thank you in advance for your attention. And I'll see you later for those who will join us in the VLive of Volumetric Trading, where we'll be trading live in real time with the markets open. I wish you a great day and happy trading.